When it comes to navigating the complex world of home buying or securing a mortgage, there are crucial steps that can make a significant difference in your financial journey. Among these steps, two terms that frequently emerge are pre-approval and pre-qualification. While they may sound similar, understanding the disparities between these two processes is essential in making informed decisions and achieving your homeownership dreams. Hello, it's RASHA INGRATTA'S, a licensed mortgage agent with Mortgage Intelligence since 1999, located here in Windsor, Ontario. In this video, we will explore the key differences between a pre-approval and a pre-qualification, shedding light on their distinct purposes and outcomes. By the end, you'll be equipped with the knowledge to choose the right path for your unique circumstance and objectives. What is a pre-approval? A pre-approval is a vital step in the home buying process that can provide you with a significant advantage as you search for your dream home. Essentially, a pre-approval is a formal evaluation conducted by a lender to assess your creditworthiness and determine the maximum mortgage amount they are willing to offer you. This process involves a comprehensive analysis of your financial history, credit score, employment details, and other relevant documentation. To initiate the pre-approval process, you'll need to complete a mortgage application and provide the necessary supporting documents, which typically include income verification, bank statements, tax returns, and employment records. Once the lender reviews your application, they will issue a pre-approval letter. This letter outlines the mortgage amount you are eligible for, subject to certain conditions such as a satisfactory property appraisal and any additional requirements set by the lender, and will also outline a rate hold for 120 days. Obtaining a pre-approval offers numerous benefits. Firstly, it demonstrates to sellers that you are a serious buyer who has undergone a rigorous evaluation process, giving you a competitive edge in a competitive real estate market. Sellers are more likely to take your offer seriously and prioritize your bid over other potential buyers. Secondly, a pre-approval provides you with a clear understanding of your budget and purchasing power. Armed with this knowledge, you can focus your property search on homes that fall within your price range, saving time and effort. Additionally, knowing your maximum loan amount allows you to make strong and realistic offers when you find the right property. Furthermore, a pre-approval can expedite the closing process. Since much of the paperwork and verification has already been completed during the pre-approval stage, the mortgage process time can be significantly reduced, resulting in a faster closing timeline. However, it is important to note that a pre-approval is not a final mortgage commitment. The lender will still need to evaluate the property you intend to purchase before granting the final mortgage approval. Other factors such as changes in your financial situation or credit score can also impact the final mortgage approval decision. A pre-approval is an essential step in the home buying process. It provides you with a clear understanding of your borrowing capacity, strengthens your position as a buyer, and streamlines the closing process. By obtaining a pre-approval, you can confidently navigate the real estate market, making informed decisions and increasing your chances of securing an ideal home. What is a pre-qualification? A pre-qualification and a pre-approval are not the same, and it is important to know the difference. As defined above, a pre-approval is a formal evaluation conducted by a lender to assess your creditworthiness and determine the maximum mortgage amount they are willing to offer you. Some examples of pre-qualifications are banks advertising 60-second pre-qualifications or online qualification tools. Pre-qualifications are good for getting a rough understanding of what you can potentially afford, but it's important to note that the number you get pre-qualified for holds no weight in the eyes of a lender. During the pre-qualification process, you will typically provide the information about your income, assets, debts, and other financial details. Unlike a pre-approval, pre-qualification is generally a quick and informal process that requires minimal documentation. While pre-qualification has its benefits, it is important to note it is not an accurate representation of your borrowing capacity or a guarantee for a mortgage. Here's why. Number one, self-reported information. Pre-qualification relies heavily on the information you provide to the lender. Since it does not involve a thorough verification process, there is a possibility of inaccuracies or omissions that could affect the mortgage amount you are ultimately approved for. Number 2, no credit check. Pre-qualification usually does not involve a credit check. While this can be advantageous if you have concerns about your credit score, it also means that the lender does not have a complete picture of your credit worthiness. Your credit history plays a significant role in the mortgage approval process, and a pre-qualification does not consider this important aspect. Number 3, limited documentation. Compared to a pre-approval, pre-qualification requires minimal documentation. Without a comprehensive evaluation of your financial records, the pre-qualification amount may not align with the actual mortgage amount you can secure. Pre-qualification is a useful starting point when considering a home purchase or seeking a mortgage. While it offers quick insights and aids in initial planning, it is important to recognize its limitations. To gain more accurate assessment of your borrowing capacity and increase your credibility as a buyer, it is recommended to proceed with a pre-approval, which involves a more comprehensive evaluation of your financial records and credit worthiness. A final approval is contingent upon several factors and conditions. Maintaining open communication with your mortgage agent throughout the process, providing requested documents promptly, and staying informed about any potential changes in your financial situation can help ensure a smoother transition from pre-approval to final approval. Remember, even if you receive a pre-approval, it's crucial to continue practicing responsible financial habits and avoid making major changes to your financial situation. Thanks for watching this video. If you found any value, please like, subscribe, and share this video with a family member or friend who'd also benefit from seeing it. If you have any questions, make sure to reach out to my office at 519-250-4848, and either myself or one of my mortgage advisors will be happy to help. It's RASHA INGRATTA with Mortgage Intelligence. Have a wonderful day.